Assalamualaikum warahmatullahi wabarakatuh and good morning everyone. First of all, praise and thank God for His blessing and grace so we can attend today in a good condition. I also thank our lecturer, Ma'am Irmawati, who always looks so gorgeous, and all my friends. And let me introduce myself. I'm Iwi Elisa Karisa with register number 361200056. Well, in this occasion, I will present about valuing and reporting investment. The value of debt and stock investment may fluctuate greatly during the time they are held. For example, in one 12-month period, the stock price of Dell Computer Corporation hit a high of $30.77 and low of $18.87. In light of such a price fluctuation, how should company value investment at the balance sheet date? So, we will discuss in this submaterial. The first is category of securities. The second is balance sheet presentation, discussing between short-term and long-term investment. And the third is realized and unrealized gain or loss. So, ladies and gentlemen, we move to the first topic is category of securities. For purpose of valuation and reporting at the financial statement date, company classify debt and stock investment into three categories. The first, trading securities, are bought and held primarily for sale in the near term to generate income on short-term price difference. The second, available for sale securities, are held with the intent of selling them sometime in the future. And the third is held to maturity securities, are debt securities that the investor has the intent and ability to hold to maturity. So, ladies and gentlemen, we move to the second subtopic is balance sheet presentation. In the balance sheet, companies classify investment as either short-term or long-term. Short-term investment. Short-term investment, so-called marketable securities, are securities held by a company that are first, readily marketable. An investment is readily marketable when it can be sold easily whenever its need for cash arises. And second, indeed to be converted. Intent to concern means that management intends to sell the investment within the next year or operation cycle, whichever is longer. So, investment that do not meet both criteria of classify as a long-term investment. Next, we talk about long-term investment. Company generally report long-term investment in a separate section of the balance sheet immediately below current asset. Long-term investment is available for sale securities reported at fair value. Investment in common stock accounted for under the equity method are reported at their equity value. Next, we move to the third submaterial is realized and unrealized gain or loss. Presentation and realized and unrealized gain or loss. Company must present the financial statement gains and losses on investment, whether realized or unrealized. In the income statement, company report gains and losses in the non-operation activity. Interest and dividend revenue are also reported in the section. So, in this presentation, I conclude that investment in debt and stock securities are classified as trading available for sale or held to maturity security for valuation and reporting purpose. Trading securities are reporting or current asset. So that's all my material in this presentation. I conclude that investment in debt and stock securities are classified as trading, available for sale or held to maturity security for valuation and reporting purpose. Trading securities are reporting as current asset at the fair value, which changes from cost reported in net income.